Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
In this video, I want to speak about AUD USD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just broken above a quite strong area of previous monthly support, which was once again acting as support here, which the market broke to the downside with this red candle. At that point, previous support was turned resistance. The market tested it here and rejected it to the downside. However, at the moment, the market is once again managing to break above this level. And if we will have a monthly close above the zone, at that point, this previous resistance would once again be acting as support. And what we could expect at that point is a retest before then getting more bullish continuation. Now, if we drop down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how clearly the market has now already broken above the previous weekly resistance from which the market created this red candle here, which now that the market has broken it to the upside is turned support here. So what we could expect is a potential retest of this previous weekly resistance turned support before then getting rejected to the upside. Going down in the daily time frame, what do we have? Now, first of all, here in the daily, we did have the creation of this M pattern. Now, in general, after the creation of an M pattern, what you could expect is a rejection to the upside and the completion of the M pattern at the neckline. I did in fact make a full breakdown of AUD USD when the market was here, explaining all the reasons for which we could expect this rejection to the upside. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, now that the market has created this impulse, also from a daily perspective, we had a clear break above the previous daily resistance, which is now turned support. Now, if we take our Fibonacci from the low to the high of this impulse, what we can also notice is that we have the 0.32 50% and 0.618 Fibonacci retracements all lining up exactly at this level, which is also the previous daily resistance turned support that we have just identified. Now, what this means is that if the market will successfully manage to retrace to this zone, then from here we could expect a potential rejection to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the AUD, we can see how with the last reports, net positions got increased. We went from minus 51k net positions all the way up to now having minus 33k net positions, which indicates that in the long term, institutions are starting to shift to the bullish side of AUD USD. Now, why do I say AUD USD? Because even though we're just checking the data for the euro, all currencies on the spot are traded against the USD. So if we're checking the data for the AUD, we are actually already checking AUD USD. So if the market here will create a correction to this zone, how we could be approaching a potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid forward entries and these kind of things. That is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the program, you can get a full refund from your student dashboard inside of your trading account, essentially credited into your trading account. And if you scroll over here, you will see that at the moment there is still time to join before the offer expires and the price goes back to normal. However, spots are limited, so if they get filled before the timer goes to zero, the offer will end anyway. So I really suggest that you join directly from here in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.